Hi, I'm Scott Volpenheim, Director of Marketing at ERP Suites. I'm here with Mark Zink, and we're going to talk about analytics today.
Thanks, Scott. Look forward to the conversation.
All right, so we talked about sales and marketing, supply chain. I think another big one would be financials,
Okay.
finance and accounting.
Yeah, our traditional scorekeepers have done a lot of the heavy lifting in this space. I don't see that their requirements are getting any lesser than the other folks out there. They've got more regulatory frameworks, more things they've got to monitor. They've also got fairly complex formatted reports that need to get out there. An organization has to speak in terms of finance. And so if it takes you a week to produce financials or more, it takes you a long series of times to get your books closed, whether it's on a monthly basis or on a quarterly basis. And believe it or not, some companies actually close on a weekly basis, particularly retail, and some folks like that do that on a weekly basis to be able to analyze those results. What we see traditionally in that space is the opportunity in financials is clearly financial analytics. Be able to, one thing that I wanted to mention really throughout this whole conversation is the ability to author analytics without IT. So in this space, we've been calling it low code or no code. So our financial folks have always been pretty savvy. They've been able to do VLOOKUPs and HLOOKUPs. They know business functions. They know how to solve things in using a fairly complex, robust set of tools. ERP Suites, Oracle Analytics, we're offering you the same kind of platform. We're not introducing the complexity of code, but we are definitely introducing the ability to author your own financial analytics, whether it's on a weekly, monthly, quarterly, or annual basis, to be able to do those kinds of visualizations, graphs and charts, being able to see a trend in a particular account or a particular business unit, or maybe not necessarily on an account, it could be on like gross margin or net income or earnings before interest and taxes. So it could be a number that's derived from a set of accounts, or maybe even consolidated from a set of business units or from a set of companies. So being able to perform financial analytics, that's pretty obvious. If I didn't mention that, Scott, then you'd say, well, you're not necessarily getting it. Okay, so in that same context, budgeting and forecasting.
Yeah.
Every organization, or at least most organizations, as part of the controlling element, tries to anticipate what's the next year look like. Tries to anticipate what that costing structure will have to be absorbed, either by margin or by cost. So what organizations traditionally do is some measure of some kind of seeding the budget or trying to figure out a way to get the budgets at least started. I see Oracle Analytics Cloud, or our platform, as the ability to not only take your account analysis, but to perform a forecast independent of what your management says. No longer at 1.03 anymore. So here's a good example where maybe some of the data that's provided outside of the ERP package, like inflation and trends, and certain products and commodities are trending at higher rates than inflation. Being able to introduce that into your forecast and your budget is kind of important. Therefore, you didn't lose the number just because your management team said times it by a 1.05% next year. Instead, you're being much more succinct with your numbers, your extension of your numbers. So being able to seed the budget, monitor the variance thereafter, and then basically in that space, it's really a productivity tool, because budgeting is a long academic exercise before it gets to a point where management has kind of agreed that these are numbers we can perform against. So I think I see that as gaining some efficiencies in the financial, and gaining actually probably some accuracies, as I just kind of mentioned, a little bit more refinement to the process. And I think the last one is one thing that you get almost instinctively. So when I'm in our platform and I'm looking at a particular department or I'm looking at a set of transactions out of my ledger. One thing that's kind of hard sometimes when there's a ton of records in there is trying to figure out where the outlying records really are. Which ones are outside of the norm? Which ones are not necessarily meeting that particular account standard, or within a certain mean, medium, or mode, or maybe a certain volume. Sometimes it's not a question of what is the number in that account. It may be how many transactions are in that account. That suggests maybe the accounting has changed. Or maybe not enough accounting had been done because in the past we had done a lot of adjustments to say like obsolescence accruals or something of that nature. And all of a sudden it looks like we're not doing that anymore. So the ability to visualize, quickly visualize outliers and clusters in transactions that are outside of their standards, and to be able to either analyze that quickly, address maybe the audit concerns to assure that these numbers were booked properly, or maybe that could be an accrual rather than an immediate hit, or some kind of expense that could be allocated over time. So the reality of it is to be able to get deep into your ledger and find those transactions that don't fit the normal patterns. And that could be true for even vendors. That could be even true with customers. So what I'm really talking about is, in this case, for finance, and you kind of talked about, like always back to supply chain and a couple other areas, you could really use this as deep insights into your individual transactions to figure out, hey, were these things properly recorded?
I saw one of those examples actually in the platform, and the visuals, like you said, were great, able to pick out those outliers.
Yeah, and it really takes you back to a lot of the use of statistics. And auditing, in many cases, relies on a lot of that kind of approach. You've got to, but like you were saying, it's kind of trying to figure out where can I manage by exception rather than by the entire rule. So this is another example, Scott, where I feel like we're being more efficient and we're addressing risk, and maybe we can get ahead of cost. And the more we can do this effectively and maybe be able to further communicate this really outside of our individual departments, we may find some immediate cost savings even with our auditing, or maybe we can refocus on more value-added audits rather than the traditional analysis that's done in order to kind of look at individual transactions or processes and figure out which ones are tolerant and which ones are out of tolerance, that kind of thing. So it could be a good leverage to increase efficiency of my own resources, but maybe able to reduce some cost from external resources as well.
Yeah, thanks. Those are really, really great examples across the whole, how many different departments across the whole company can really benefit from analytics. And it just comes down to, ERP Suites allows you to jumpstart that solution, get going, and you may not need the CRM or the web analytics, but just getting some of those data points fed in so that we can combine it into the platform is key.